All right, let's talk a little bit about some things that are going on with the economy, which could end up being the biggest story of the coming
Mhm.
years. This term doom loop is getting used now over and over again to describe basically a downward spiral, and specifically with regard to commercial real estate. Put this report up on the screen from the Wall Street Journal. Their headline is Real Estate Doom Loop Threatens America's Banks. Regional banks' exposure to commercial real estate is more substantial than it appears. So the Wall Street Journal did an analysis of the level of debt that was held by especially mid-levels of regional banks, the level of commercial debt that they held. And also, they say that in addition to that direct exposure, many of these banks also lent to financial companies that make loans to some of those same landlords and bought bonds backed by the same type of properties. And that indirect lending, if you include that, amounts to an equivalent of 20% of their deposits. That gives you a sense of the massive amount of exposure that these regional banks have. Put the next chart up on the screen so people can visualize this. This, they say, is the cumulative change in commercial real estate exposure since March 2015 by bank size. This was based on an analysis of FDIC data. You can see large banks have some exposure, but there is a much higher level of risk for the sort of regional and local banks which have already been made more vulnerable by Fed interest rate hikes that, pushed some who were kind of outliers in a sense, but still could be canaries in the coal mine like Silicon Valley Bank over the edge. Now, as we've discussed before, the reason we're harping on commercial real estate in particular is because during COVID, obviously a lot of office workers worked from home, and now remote work and hybrid work schedules have left so much of big city office space vacant. The values of those buildings have collapsed and are continuing to collapse. We're seeing that in real time. The number of sales of those type of properties is down like 70%, so it's just fallen off a cliff. Many people who hold these type of properties, they're trying to wait out the storm, so they don't actually want to sell right now because they're kind of afraid of how bad the valuation would be. And at the same time, a lot of their debt comes due over the next couple of years. And if they did have to roll over and refinance, we now have much higher rates than what existed in the past. So they're under a massive amount of pressure. And that means that the banks that hold this debt are going to be under a massive amount of pressure. And it seems very unlikely at this point, given that, hybrid work schedules, I think, are here to stay. And given the difficulty of converting these spaces into residential units, it seems very difficult to imagine what gets them out of this terrible situation.
It's a big problem. I mean, it's one of those where by the way, I was not aware of how much of commercial real estate floats on variable interest loans. I guess everyone just got real comfortable, didn't they, during the
Yeah.
2010s? It's one
Yeah,
of
they
those,
just thought like
yeah.
zero interest rate would last forever.
I mean, it's crazy. I'm reading this and I'm like, did nobody ever price in the fact that we could go to 5%? Because when you do, then the entire cost, like the cost projection of your property takes a dive.
Yeah.
Then you take, and that's in normal times. Then you take a situation like COVID and you take a black swan event, you're getting absolutely wiped out. And the exposure here is wild. I mean, we're talking trillions and trillions of dollars across office and apartment lending, construction loans, small business loans, commercial mortgage-backed securities, real estate investor loans, and then other assets linked to actual commercial properties. The Wall Street Journal has been doing fantastic work on this, and I just don't think that they and other analysts in the space won't continue to use doom loop unless they mean it. I mean, and I look at this, Krystal, and I just see basically no way out except for a bailout. I mean, there's just no way that these real estate billionaires who have their entire fortunes that are pegged to their real estate asset portfolios, you really think they're going to take a 40, 50% haircut and they're going to let the downtown go bankrupt? There's no way. It's not going to, I'm not saying I think it's just. I'm saying I'm looking at this, bailout is coming, 100%. There's no way that they'll let the billionaires go bankrupt on this, or even the small regional banks. Everybody will come up with some, reason, et cetera, why, but we are either a year out, maybe a year and a half out, who knows? There's no way interest rates are going to zero again. It really looks, from basically what I've read, where a lot of these loans don't even make sense over 2%. And then, and that's with vacancy. And considering where we are with that, It's a catastrophe. And one of the reasons why everyone should care about this is that if small banks and regional banks and all that stuff get wiped out, that has a huge downstream effect. Not only does it consolidate even more so the power in Chase Manhattan Bank and all these other banks, JP Morgan Chase, all these other Bank of America, Citibank, all these other people, it dramatically restricts the ability for people to get loans for a normal everyday life,
That's
like
right.
mortgages, small business. I mean, there's so many different things, car loans, whatever. You basically just have a one dealer and then their terms, you set the market and that's it. So what are you going to do? If you need a house or something, you go to your small, regional bank or whatever to get that. Yeah, those days may be over after these banks go under.
From what I can tell,
Yeah.
this is the biggest risk of catastrophe that is hanging over our economy right now because, I mean, the math just doesn't work out. And the reason that they've deemed this a, quote, doom loop is because of what you're pointing to, Saagar. Effectively, if losses on those loans occur in massive amounts, then what are the banks going to do? They're going to cut their lending back because they, are trying to cut back on their risk. Then that leads to further drops in property prices and even more losses, and on we go. That's the doom loop that they're describing here, and it's hard to see how any other future comes to pass, given what we know about office vacancy, given what we know about, the extraordinary level of price decline for these properties, given the interest rates and how much they have come up and how that makes so many of these loans not work. It's hard for me to see how this one ends well. So this is one we're going to keep our eyes on. The other thing that we've been really keeping our eyes on is housing, which I think is, actually Stoller, when he was talking about like, why do people feel so bad about the Biden economy?
Yeah, housing is.
He's like, I think it's housing.
Yeah.
And I think there's a pretty good case to be made about
correct.
that.
Yeah,
when you can't, that's like the basic building block of a stable life is like, can I afford the rent? Can I ever conceive of buying a house? And increasingly, for more and more Americans, the answer is no. Apparently, suburbs have been particularly hard hit in terms of rising rents. This is another Wall Street Journal piece. They say that suburban rent growth exceeds its urban counterpart in 28 of 33 metro areas, according to a new study. This is yet another post-pandemic and pandemic era trend, where during the pandemic, people wanted to get out of the city, they wanted more space, they wanted to be able to move around and not be so confined. And they, office workers were working from home, so they didn't have to worry about their commute. And so people fled a lot of these urban centers. And guess what? They've decided that they like where they are and they want to stay.
Yep.
So the suburbs have seen huge growth. And with that growth has come a lot of pressure on the rental market. So it's becoming super expensive to afford an apartment in a lot of suburbs across the country. What they say is that many white-collar workers with remote jobs moved down to city apartments for roomier accommodations during the early months. Now, high mortgage rates and home prices are keeping some of those families renting for longer periods. Rising crime and homelessness in several big cities also has some renters looking to the suburbs. That trend is propping up rents and fueling concerns about rental affordability in suburban areas, leading some governments to pass new rent control measures in response. And actually, if you look across the country, some of the biggest activist energy is actually around tenant protections and rent controls and trying to deal with this crisis of affordability. Huge energy around this across the country. And they point to Montgomery County, Maryland, and PG County, Prince George's County, Maryland. Both of them are Washington, D.C. suburbs that have taken some real steps in response to this affordability crisis. But this is, a massive issue for a lot of people who are just trying to have a little bit of more room and have been priced out of the housing market, but are now starting to be priced out of the rental market as well.
Priced out of the rental market, what are people supposed to do? And, I'm somewhat sympathetic too. Some of these people, they want to buy. They want to buy a house in the suburbs. Guess what? Not with an 8% interest rate. That ain't going to happen. So what are they supposed to do? You got to rent. Well, if you got to rent, then you're pushing somebody else out of that house they would have done. Now, if they're in a multifamily home and then now somebody else is homeless or moving somewhere an hour away and has a terrible commute. So it's a bad system all the way around. I think housing is number one. looking at this too. I mean, I just don't know how you fix it, because when you got massive construction loan rates and all that stuff, it's not like people are going to be building new things. Developers are actually, there is a big boom right now, luckily, in terms of what people are developing, but the overall price to justify your build, it's going to be high.
Yeah.
Who can afford that? Well, probably not you. Yeah.
That's the issue, is there is actually a lot of development that is happening right now, but it's high end because that's where the money is. So it doesn't seem like a problem that just like letting the free market do its thing is going to solve. You're going, in order to build out the number of units you would need in order to make housing anything approaching affordable at this point, it's going to take some direct government involvement. You know, these cities and localities are doing everything they can, but they don't have the level of funds that at the state level, let alone the federal level. So you're really going to need, and this was something that was proposed in the Build Back Better bill originally, was a lot of money to fund and incentivize construction of these affordable, you know, more affordable units. Montgomery County has been pretty innovative in some of their like public-private partnerships and mixed income apartment building living. There's some interesting like pilot projects that are happening here close to DC. But of course, it's nowhere near the scale that would be needed to deal with this problem.
This is a multi-trillion-dollar issue. It would require the actual attention of the president. And just like everything else in our politics, no one is going to pay attention to this, guys, until it breaks completely. That's what I was talking about bailout. We will resolve this problem when there's a bailout, when there's an actual complete bottom falls out, even though everyone can see that it's coming. I would bet you if you ask 10 people in the White House, maybe one guy, the junior guy, has it somewhat on his radar. The president probably has no idea what's going on. And that's our system. We don't do anything until it's a crisis.
That is so true. And when there is a single bank that fails,
then we'll pay.
Then DC will pay attention. But when you have, people getting kicked out on the street and can't afford the rent and they're just completely screwed, oh, well, that's not, we can deal with that, a decade from now. But the minute that it's a bank and their investors and whatever that are in trouble, then they'll hop to.
Yeah, wait till the billionaires actually start to suffer, and then maybe we'll start to pay attention.
Hey guys, if you like that video, go to breakingpoints.com, become a premium subscriber, and help us build the best independent media organization on the planet.
That's right. We're subscriber funded. We're building something new. We want to replace these failing mainstream media organizations.
So again, to subscribe, it's breakingpoints.com.